Hi traders, welcome to another weekly Forex forecast on FX list, which is for 21st to 25th of December year 2020. In this week, I'm going to share with you some list of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today is your first time viewing my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're gonna be the first to be notified. Also, remember, forex trading is an high risk investment as well and high rewarding investment. Therefore, do not trade more than the amount of money you cannot afford to lose, and then do not trade with a borrowed money. Here are the list of markets I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the Australian dollar paired against the USD. I have the British pound sterling paired against the Japanese yen. And then I'm going to wrap up our analysis with the XAG paired against the USD or the silver. So let's dive into the weekly Forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. And to skip from one currency pair's analysis to another, there's a timestamp under this video. Check right there, the timestamp is going to guide you through. In the last weekly Forex forecast, we discussed about the British pound sterling paired against the USD. And then I pointed out we have to pay close attention to the dynamics trend line, which had been supporting price for a bullish rally right from the midpoint right here. That was in May and then June of 2020. We can see the bullish trend is still active on the British pound sterling paired against the USD. So let's zoom in on these currency pairs. Zooming in, we can see price broke the key level resistance. Got a resistance right here. We got a resistance structure right here. Price broke the key level resistance, which acts at the price level of the 1.34829. That was a Wednesday bar with a high volume, and Thursday bar did not continue the bullish rally. However, Friday bar retested the key level support of the 1.34829, and the boost successfully ensured no rejection of price above this key level structure, which means the bulls are still active and then they are still defending this key level structure. So next week, as a price action trader, we need to pay close attention to this key level structure of the 1.34829. That is based on the lower time frame to see how price is going to react to this key level structure. And the next key level resistance we have to pay close attention to is the key level which acts at the price level of the 1.36887. So next week, as a price action trader, figure out to see how price react to this key level structure. If the bears should pull price downward and then ensuring a bearish close below this key level structure of the 1.34829, then this does has a possibility of the bears making a rotation of price downward to the key level support, which acts at the price level of the 1.32799. So next week, pay close attention. Maybe the bears are going to make a rotation of price to this level, and then maybe it's going to re-expose this dynamics support trend line to the forces of the bears once again. So let's check on the 4-hour chart frame. Here is the 4-hour chart frame of the British pound sterling paired against the USD. We can see the key level structure of the support. That is the price level of the 1.34829. So next week, I'm going to patiently pay close attention to this level to see how price is going to react. Maybe it's going to be for the bullish upward movement or maybe for the bearish downward movement. The next currency pairs on our watch list is the euro paired against the USD, where you can see right from this level right here, we can see our price broke out of this no price within the range, a rectangular box, for a bullish upward rally. So let's zoom in on these currency pairs. We can see price is currently at the resistance level of the price of the 1.22412. This is a resistance structure which we can figure out based on the weekly chart frame. So navigating on the weekly chart frame, we can see we got this no structure of the 1.22412 as a support for price right here. That was in 2018. So this is a multi-year key level structure we got to pay close attention to next week. So let's check back on the daily chart frame. Checking back on the daily chart frame of the euro paired against the USD, we got to pay close attention to see how price react to this key level structure. And then if you want to buy, sell right here, the best thing to do is navigate based on the lower time frame to see how price is reacting based on the lower time frame. Checking on the lower time frame, that is a 4-hour chart frame. If you want to buy right here, you're gonna figure out there is a depreciation in bullish momentum at this level right here. We can see we got a strong bullish move right here, a rejection of a bullish move right here. So if you want to buy right here, it's kind of very risky because price is signaling existence of a potential exhaustion in the bullish rally right there. So the best thing to do is, if we can figure out price make a rotation to this minor key level structure, which we got right here as a resistance right here, we got it right here as a resistance structure right here, likewise right here as a support. If we can see price make rotation to this level right here as a new support again, once again, then we can look out for a bullish price action pair right here in order to anticipate for a bullish continuation rally. So it's gonna be like we got a bullish rally right here, a bearish rally, and then a bullish rally right here, then a bearish wave right here for a continuation of a bullish rally. So next week, pay close attention to see how price react to the key level of the 1.22412 on the euro pair against the EURUSD. Navigating back to the daily chart frame of the euro pair against the USD, make sure you pay close attention to the Friday bar which capped right here at the key level structure of the 1.22412. It was a my bar right here, which does signals reduction in the bullish momentum right here. It means the bulls are gradually getting into a state of exhaustion. So if you want to buy right here, you have to be very conscious of this Friday bar. So next week, pay close attention to this key level structure of the 1.22412. Maybe price is gonna offer a bearish price action signal in order to short the euro pair against the USD. Alternatively, next week, if the bulls should step in whereby they continue the bullish rally right here, I'm gonna just fold my hands and watch how the bullish rally continues. I love to stack the odds in my favor. I love to have a lot of factors supporting my trading decision in the market. So buying right here, I don't have a nice proper zone to apply my risk level. That is, if you want to apply your risk level right here, then it should be at this swing rejection zone right here. The next currency pairs on our watch list is the Australian dollar paired against the USD. We can see the Australian dollar had been on a strong bullish rally right from the swing level right here to the high right here. We got a bullish wave. So I held a private webinar class that was in last week spent. I discussed about what I can figure out on these currency pairs. So let's zoom in. I gave out a trading signal on these currency pairs based on the 4-hour chart frame, and I said, due to what we had right here, a resistance right here, and then we got another resistance structure right here, we got a resistance right here, we got a bullish move right here which closed above this level, and then price is retesting this level again. After price carved a bullish arami right here, I advise right here to go long on this currency pairs, and then right now I already sent out analysis in order to be on the safer side because of next coming week, that is on Monday. It's advisable you trade some profits so to avoid some risk. So next week, you got to pay close attention to see how price is going to react to the key level structure of the 0.76632. So if price should get to this level by the boost, that is a key level structure, resistance structure of the 0.76632, there is high tendency for the bears to step in order to pull price downward. Alternatively, next week, if the bulls should step in whereby they move the trend aggressively and then break above this key level resistance of the 0.76632, there is high tendency for the bulls to continue the strong bullish aggressive rally we got right here. You can see the swing low right here, the swing low right here. We got a swing low structure right there. So let's check this bullish movement based on the higher time frame. So let's navigate based on the weekly chart frame. Here is the weekly chart frame. You can see that. So next week, if the bulls should step in whereby they clear off the key level resistance which acts at the price level of the 0.76632, the next key level resistance which the bulls have a high tendency to expose is the resistance structure which acts at the price level of the 0.80668. So next week on the Australian dollar paired against the USD, based on the daily chart frame, kindly pay close attention to see how price is going to react to the key level resistance which acts at the price level of the 0.6632. Maybe price is going to carve a bearish price action signal to sell, or maybe the bulls are going to step in aggressively in order to continue with bullish upward rally. If the bulls should step in right here, I'm not going to be willing to buy because this is kind of too steepy movement to buy right here, and which does has a lot of high risk. Instead, I will patiently wait to see how price is going to react. Maybe price is going to offer the opportunity to make a reversal of price downward in order to retest the key level of the 0.76632. Maybe it's going to serve as a new support level in order to anticipate for a bullish upward rally. The next currency pairs on our watch list is the British pound sterling paired against the Japanese yen. Here is the chart. We can see price is currently going through its process of transformation within a symmetrical triangle. We can see right from the swing high right here, we got a retest right here, we got a retest right here, and then we got a continuous retest right here. We got a support test right here, support dynamic, support right here, dynamic trend line, support right here. So we all know in a symmetrical triangle there is a possibility of two direction of breakout of price. Price can either break to the upside or to the downward side. So let's zoom in on these currency pairs. Zooming in on the chart of the British pound sterling paired against the Japanese yen, we can see the continuous test of this dynamic trend line. We can see that. We can see the first test right here, even though price failed to retest this trend line. We can see the test right here again. Once again, we can see right here the second time, and we can see right here the third time. Whenever there is a continuous retest of a trend line, it does signals a potential imminent breakout. So right here, there's a high tendency for the bulls to break out of this dynamic resistance trend line. Whenever price keeps on testing a trend line, it does signals there's a weakness in such trend line. If we should navigate back to history on this chart, we can see whenever there's a retest, once there's always a pullback of price by the bears. Likewise, we got right here, when there was a retest, there was a strong pullback of price. Likewise, right here, there was a strong pullback of price. But right here, we got it at a continuous test of this dynamic trend line. So next week, pay close attention to the British pound sterling paired against the Japanese yen. It does have a high possibility to result into a bullish breakout. So next week, pay close attention to see how price is going to react to this dynamic trend line, which is in the intersection of the midpoint of the price level of 140/138.925. And then if we should view this chart based on the weekly chart frame, we're gonna see price is currently in a bearish rally right from this swing high right here, that was in 2018, to this year right here, 2020. So that is 2 years. So that is a multi-year dynamic trend line. We got to pay a close attention to next week. Alternatively, next week, if the bears should step in, let's check on the daily chart frame. If the bears should step in, whereby they make rotation of price from this level structure right here, there is high tendency for the bears to pull price more downward. And then if we pay a close attention to this key level structure of the 138.925, we can see price broke through freely right here, which does signals this key level structure right here, it's no more so much effective. So we can simply eliminate this key level structure right here. We can remove this and then have our new key level structure at this level right here, which I represented with a arch rectangular structure right there. So right now we got a new key level structure at the price level of 137.78. So next week, if the bear should step in and then pull price from this level, there is high tendency for bears to retest the next key level support, which acts at the price level of 137.783. And then if the bulls should step in, whereby they put price upward, they have to clear off this dynamic trend line right there before they can aim higher to clear off this price level of the 141.149 before they can aim higher for more bullish upward rally. It's time we wrap up analysis with the XAG paired against the ULZ or the silver. Even though I haven't been trading so much in the month of December, if you have been following me for a while right now, you would know how I do not trade in the month of August and then month of December. but I have been accumulating a lot of cryptos and then metals as well, and the silver is among. So I've been putting my resources, my investment on silver, for the fact I can figure out a nice, well-defined price action structure right there, which does has a lot of potential for the boost to take up this rally on the silver. So we can see right on the silver, right, if I zoom in, you can see right from this level right here, we can see the bullish, strong, aggressive rally on the silver. We got a bearish rally right here, and then price is breaking out of this dynamic trend line, and then in combination of this dynamic trend line to this support right here, we can see we got a descending triangle formation which lies right here. So if I should clear this off and then have this structure from this level right here and then to this key level support right here, you're gonna figure out we got our descending triangle, and then this descending triangle is actually failing right now. It's failing and the price is closing above. Technically this pattern right here got a bearish implication, but the bulls are taking over. So next week, as a price action trader, you got to pay close attention to this key level structure. That is the resistance structure we got right here as a support right here, resistance for price right here, and the price is currently trading at this level. That is the price level of the 25.820 on the receiver. So next week, if the boost should continue or a strong bullish aggressive move above this level, then it does suggest there is high possibility for the boost to pull price of the silver to the next key level resistance, which would act at the price level of the 28.25974. Alternatively, next week, if the bear should step in whereby they ensure a strong bearish move, the bulls have to do all what they can. I mean all what they can to defend this dynamic resistance trend line, which we got right here for price as a dynamic resistance. We got it right here as a dynamic resistance, and the right here a rejection swing high level here. So if this level right here failed to act as a new dynamic support for the bulls, then don't be surprised if the bears should pull price downward, and then if that should occur whereby the bears are successfully to ensure a bearish close of bar below this dynamic trend line, then it does signals a false breakout right here. Don't be surprised if the price of the silver drastically depreciate in value to the previous key level support, which acts at the price level of the 22.601, and then this could interest more sellers to short the silver to the next previous key level structure, which acts at the price level of 18.715. So these are the markets I am watching out for next coming week, especially the metal market, the silver, the crypto, the gold market, and then energy market as well. So if you haven't joined my free forex trading webinar class, there's a link under this video. Make sure you check on the link, register today to become one of the students. It's a free class. And then if you want to become a member of the VIP community of FSLS, this is a community whereby I share my trading personal decision in the market. Click on the link I left under this video so you can become a member today. And then any trade you want to execute next week, make sure you implement a reasonable money management system. So that is all I have for you in this weekly forex forecast, and then do have a wonderful weekend ahead. Peace.